Investing can be daunting if you feel like you don't have the educational building blocks to make informed decisions. But here at Charles Stanley, one of our goals is to help you learn about the investment landscape as a whole. So with this in mind, join me as I learn about different fund sectors as taught to me by the industry experts who actually run them. For inspiration, our direct investment service preferred list can be a great place to start. Compiled by our experts here at Charles Stanley, designed to provide a helpful short list of fund options to choose from. But we want to take this one step further. So each month, we're going to be learning about different fund sectors, giving you the educational tools that you need to make informed investment decisions. We'll be taught about each of these investment areas, what factors to keep in mind, stock market considerations, the impact of current events, cause for concern, and everything in between. But before I introduce this month's guests, if you're liking what you're hearing, please do go ahead and like, share, subscribe to our videos, engage with us in any way that you see fit. So today we'll be learning about the Asia sector. We'll be joined by William Lam, manager of Invesco's Asian Fund, alongside Charles Stanley Direct's very own chief analyst, Rob Morgan. Let's check it out. Rob, Will, thank you both so much for joining me here today. Rob, I'm going to start with you. Let's talk about Asia as a sector. What does it involve and why is it a good place to invest?
So Asian sector is very varied. So for a start, you've got the big emerging nations that everyone's very aware of, China and India. But you've also got what's referred to as developed Asia. So the nations such as Australia, Korea, Hong Kong and often Taiwan as well. So huge variety there. What it doesn't include is Japan. Japan's usually the subject of the focus of another sector. And the opportunity, well, 60% of the world's population live in Asia. There's some very high growth rates in certain parts of that universe as well.
Will, anything to add on that? Why is it a good place to invest?
Well, Rob's mentioned a few of them, like the growth, but I think one thing that sticks out at the moment is it's quite a cheap area to invest. So compared to other international markets or compared to Asia's own history, Asia's pretty cheap.
So Will, China is an area of interest for a lot of people. What are your thoughts on investing in this part of the world? What can you tell us?
China's extremely tricky at the moment because there's lots of things going on that have been problematic for the country and for investors in the country. So there's loads of things we could talk about for a good hour on that, but I guess the key ones are the recovery out of COVID has been a problem, the geopolitics, especially the US-China relationship, and to some extent also the regulation that the Chinese government has been doing, especially in the internet sector. So, I mean, the nice thing about where we are today is that we're coming out of all of those issues, we think. Maybe the geopolitics is a long-term issue, but we're coming out mainly of the other two. So we think China's a cheap place to invest and it's also getting better.
Your thoughts, Rob, on China as a place to invest?
Yeah, certainly. I think, Will's mentioned some of the reasons there why investors have been shying away from China, and a lot of investors will say, the geopolitical risks and perhaps the intervention of the state into particular industries and into companies is too much to bear for their sort of risk tolerance and what they're happy doing, and that's why. Recently we've had some, poorer performance from China generally, and there is that valuation opportunity, but people still have to get their head round, that very much interventionist state that could get better, but people can't be sure of that.
And India, what are your thoughts on investing there?
India, in many ways, is the opposite of China in the sense that everything's going well.
Yeah.
Demographics are good, growth is good, any cycle is in a positive sense, in the sense we've had a downturn a few years ago, and now we're clearly on an upcycle. And there are some good companies in India, but the problem with investing there is that you're investing at quite a high valuation now. So as opposed to China, where it's below its long-term valuation norms, in India you're well above your historic valuation norms.
What other opportunities are there within the region? What can you tell us?
Yeah, so we've spent quite a long time really talking about sort of China and India, but it's there's more to it than that. So we've got the kind of developed segment as well. So you have Australia, which is obviously has opportunities in kind of resources and things like that, and you've got Hong Kong as a kind of gateway into China, Taiwan as well, which is hugely important in the global technology and semiconductor industry. So you've got sort of those sort of export nations and Korea as well, of course. So there's plenty of variety there, and generally sort of perhaps those governance questions are a little bit easier to manage in those jurisdictions as well.
Will, what are your thoughts?
Yeah, I think the one that we would highlight is South Korea. South Korea has always been cheaper than most markets in the world, and there have been good reasons for that in terms of governance and in terms of the risk of something happening with North Korea. So there's been this thing called the Korea discount. The Korea discount is still there today, even though we have similar situations in other parts of Asia and the world. So China and Taiwan don't really have as much of a discount as Korea does, despite some similar problems. So that's our favourite market at the moment, is South Korea.
That surprises me.
In terms of why we like it, or in terms of the discount?
Just to know that why you like, I just wouldn't consider that to be one of the most appealing options. Yeah.
Well, we think that the geopolitical situation at the moment actually favours Korea, because you have companies in the West who have suppliers in Taiwan and China, and they want to diversify away from Taiwan and China, and sometimes the best option is in Korea. So in electric vehicle batteries or in semiconductors, Korea is a very good option.
Well, when it comes to your fund itself, what is your approach to investing?
Yes, so as may have become apparent so far during this chat, we are very valuation driven. So valuation is at the core of how we do things, and we try to step back from the current headlines, the current trends, because we think that those current headlines and current trends affect share prices more than they ought to, and the reason they do that is because of investor psychology.
Yeah.
So humans tend to overreact.
Yeah.
When something is worth 5%, they might put 30% on it.
Yeah.
So the best place to look for new ideas to buy when things are going not so well, it might be worth 5% on the share price, but actually you're getting it 30% cheaper. And that's the way we operate, similar on the upside.
Fascinating stuff. I do know that a phrase that I've heard time and time again is the stock market is the sum of all the hopes and the fears of people, right? So it really is almost like a psychology machine.
Yeah, that's the side of investing that we would emphasize over and above the economics and the financials, although obviously they're important too.
Totally. Well, Will, Rob, thank you both so much for being here today. And thank you to all of you for watching.